Why does price keep bouncing off this one invisible line on the chart? It's not a moving average. It's not a trend line. It's called Anchored VWAP, and once you see it, you can't unsee it. VWAP stands for volume weighted average price, the average price paid by everyone that day, weighted by volume. Anchored VWAP takes that same math, but instead of resetting daily, you anchor it to one important moment and it tracks the average cost basis of every buyer since that point. Price has memory. This line shows you exactly what that memory looks like. You anchor it to a moment where the story of the stock changed. An earnings report, a big gap, a swing high or low, or the first day of trading. The goal is to find a point the market is currently reacting to, not just a random date. Here's the part most people get wrong. Anchored VWAP isn't tied to one time frame, it's tied to your anchor. Day trading? Anchor to today's open on a 1 or 5 minute chart. Swing trading over a few weeks? Anchor to the last earnings date on the daily chart. Investing for months? Anchor to the 52-week high or low on the weekly chart. Match the anchor to how long you plan to hold the trade. Setup 1. Price pulls back to the anchored VWAP and bounces, a lower risk entry than chasing the breakout. Setup 2. Price breaks below it. That's often used as the stop loss signal the moment the idea is wrong. Setup 3. Stack two anchored VWAPs from different anchors on the same chart to see where multiple groups of buyers are trapped or in control at once. Don't anchor to a random date with no real meaning. Don't use it alone. Read the broader trend first. And don't treat it as a mechanical buy or sell signal. It's a level to react to with a plan, not a crystal ball. That's Anchored VWAP in a nutshell. This is educational content only, not financial advice. Trading involves risk of loss. If this helped, subscribe for more chart breakdowns.